Hey, what's up you guys? It's Sam Kwok here, one of the Kwok brothers, and chances are you are already a big fan of the accelerated banking strategy, aka using the HELOC to pay off your mortgage. Now in this video, I'm gonna go and share with you guys the best types of HELOCs to get when using this strategy, so stick around. Hey, what's going on guys? It's Sam Kwok here once again, and you might notice that I'm not in our studio. I'm actually in South Korea right now, and you can see that the background scenery is amazing. And the reason why I'm here in South Korea is that my wife is having her baby here in the hospital here, so she's more comfortable being back home in country. So I followed along, and we have to make our YouTube video somehow. So here it is. We're filming this right now in South Korea. Actually, 30 miles that way is North Korea. So anytime now, right? So you're looking for the best type of HELOC when using this strategy. Now, I could easily go and name banks and the phone numbers to contact, but the issue is that we've already gotten some legal notices from banks not to use their trademark and their names and their contact information. And I've noticed that banks change their programs, their features, as well as what they offer from time to time. So next year, they might have a completely different HELOC program than this year. So instead of giving you guys names, which obviously this video is gonna be outdated, I'm gonna give you guys the best types of HELOCs to look for, what features, the questions you should be asking, so that when you go and approach your banks, you will be prepared to know that a certain HELOC will be a best fit for you. Now, if you're already part of our Accelerated Banking program, you already have a list of questions and the bank's recommended names to go after. Now, I know some of you guys are not students just yet, so I'm gonna give you a little bit of taste of how far and how deep it goes. Now, before I mention the number one thing to look for, be sure to subscribe as well as like this video because it does help us a lot with our YouTube algorithm. The more likes we get, the more this video can go out to more people so that more people can watch it. Cool? All right, so number one thing is that when looking for a HELOC, you want to have a HELOC that has easy access to the funds. Now, I've met individuals that came to me and said, Sam, I got a HELOC, what do I do next? Well, I found out that this individual ended up getting a HELOC where the only way to get that money, the money out of the HELOC, was to go and visit the branch, which makes it really inconvenient because every time you need to get your money out of the HELOC, well, you have to go make a visit during the branch open hour, right? The office hour makes it really, really difficult. So when looking for a HELOC, you want a HELOC that has easy access to the funds. Now, I find to be the easiest way is to simply go access through the phone, right? Just through an app, right? Just go and tap in, sign in, and transfer money back and forth between your checking account and your HELOC and so forth. Another way would be having an actual physical card where all you have to do is just swipe and enter your card number to purchase things. Makes it a little bit easier. Of course, you got checkbooks, which also, if you like to write checks and if you like it more so the traditional way, having a checkbook makes it definitely easier. You definitely don't want to have inconvenience of having to go to the ATM or the branch office to draw the money out. You want to be able to draw the money out fast, pretty much instantly. One thing that I've also noticed is that if you have a checking account with the same bank that has your HELOC, it makes it super duper easy because you can go and back and forth transfer money in a matter of just seconds, really. Another thing you could do as far as ease of access to the funds is setting up what's called an overdraft protection plan. Now, overdraft protection is simply when if your checking account has $0 and you link your HELOC account to your checking account, let's say you went and spent money out of your checking account even while at zero. Well, what happens is because it's you're an overdraft, the bank's gonna automatically draw the money out of your HELOC to cover any purchase amount that you've made. Now, the drawback to this is that some banks may charge you fees to do this. Some banks may charge you $10 per transaction. They may charge you 3% per transaction, almost like a balance transfer fee. So you wanna go to a bank, if you wanna go down that route of setting up an overdraft protection with your checking account and your HELOC, you'll wanna work with a bank that has the lowest fee possible when setting it up that way. Now, this is not the only way, but this has been one of the more convenient ways. If you're looking to just use your checking account without drawing money back and forth, that's one of the things you can do in terms of ease of use. Now, I can't continue without talking about the all-in loan, which I find to be the easiest way to use this strategy. Now, the all-in-one loan is simply your checking account and your HELOC combined to one account. So it's not two separate accounts, not connected using overdraft protection. It's truly one entity. So when you have direct deposit in a checking account, it automatically goes into your home equity line of credit balance, which again, if you know our strategy, lowers our average daily balance, which means that it's gonna go and save us a lot of money in terms of our interest. So the all-in-one loan truly is the most convenient way to do it, but not everyone's gonna qualify for the all-in-one loan. So if you're using a traditional HELOC or even a personal line of credit, you can go and use the way that I've talked about earlier in this video. Now, the second thing is that the HELOC must not come with a monthly draw limit. Now, what that means is that there are certain banks that limit you on how many times you can take the money out of the HELOC. Now, this is very inconvenient if you're looking to transfer your money back and forth from your checking account and your HELOC account as many times as you want. So you want as many times, unlimited amount of draws from your home equity line of credit. Now, the exception is in the state of Texas that you have to draw at least $4,000 per draw. So what that means is that every time you take the money out of your HELOC, it has to be $4,000. However, this does not stop you from using this strategy. There is a still way to use this strategy in Texas, even though the minimum monthly draw is $4,000 a month. Now, the third thing you should be looking out for a HELOC is you don't want a long list of limitation of use. What that basically means is that banks may stop you from using the HELOC in a certain way. There are banks that actually will stop you from using the HELOC to buy real estate. They don't want you to take one debt from real estate to go in and buy another real estate. To them, it just seems risky. So there are banks that may limit this. There's also banks that don't. They pretty much don't care how you use it as long as you pay them back. But do look out for the limitation. Another limitation that you may see is they don't want you using the HELOC for a down payment on another financing. So if you're looking to get another real estate, if you're looking to get rental properties or fix and flip properties, certain banks may stop you from using the HELOC as a down payment for another real estate. So that might be something you want to ask when shopping around for a different bank. You want to ask them, hey, is there limitations on what I can do with this HELOC? Can I go and buy real estate with this? Can I go do whatever I want? Okay, some banks really don't care as long as it gets paid. Now, some banks may ask you what your plans are with the home equity line of credit when applying for it. Now, my first rule is don't ever lie and don't ever defraud the banks, right? It's illegal, it's not right, it's not ethical. The explanation that I've been giving to the banks when working with getting a HELOC is that I'm simply looking to consolidate my debt and my cash flow. In fact, your bank is probably using this strategy, a version of this strategy with the Federal Reserve, but they don't call it the accelerated banking. It's just how it works for them. So when explaining what your intentions are with the home equity line of credit, be honest, right? Don't mislead your banks. Don't defraud them. It's illegal. Just tell them, hey, I'm looking to consolidate my debt and looking to consolidate my cash flow. That's it. Just be honest. And if you do have plans on buying real estate down in the future, hey, explain that to them, right? Hey, 5 years down the road, I may use this to buy real estate. And if they say, hey, okay, cool beans, no problem, right? So again, be honest, don't lie, and everything is gonna be okay. Now, here's a little bonus tip for you guys when looking to get a HELOC. Be careful of large closing costs, especially if you're working with a mortgage broker. In fact, I have a separate video just about mortgage brokers and exposing what they do. If you want to check that out, definitely go check. It's actually that way. There we go. That video, and check out that video, because what happens is when you work with mortgage brokers, they're going to charge you commissions, and that's going to be included in part of the closing cost. So if I were you guys, I would work directly with the banks, especially if you're going to shop around on your own. And be careful of large closing costs. Typically, what the banks are going to charge you is going to be what's called an appraisal fee, which is simply hiring a professional to assess the value of your property. So a professional is going to go out there, check out your property, and assess how much it's worth based on what the market value is going to be. Now, that fee is going to be anywhere between $400 to $1,000, depending on the size of the property. That you do need to pay, even though there may not be a closing cost. Some banks may actually be generous enough to actually pay for that appraisal fee. Very rare, but it's out there. But most likely, you're going to end up paying just the appraisal fee and try to avoid the closing costs at all times. So notice how the interest rate is not a big factor when shopping around for a HELOC. In fact, our focus in this strategy is to lower the average daily balance, is to lower the principal balance on the home equity line of credit as well as the mortgage. When you kill the principal balance, well, the interest really doesn't have a whole lot of power. So don't focus necessarily on the interest rate. While of course you don't want a really, really high interest rate like a 30 or 40%, which is ridiculous. The interest rate really doesn't have a whole lot of impact in this strategy. So don't fret about the interest rate. Focus on these features that I talked about. Make it easy for you guys to use, because when it gets hard, when the strategy is hard, it's easy for you to drop out and go back to the old way. So you want to make sure that again, it's easy to get the funds out of the HELOC. There's no limitations on how much you can take out or how often. And also you don't want a long list of limitations on what you can do with the home equity line of credit. Little bonus gift for you guys in this video is that down below in the description is a link where you can go and download the calculator for this strategy. So if you're wondering how much you can approximately save as far as time and money using our strategy, well, go and download our free calculator, which is going to show you guys about ballpark figure of how much money, interest, and time you're gonna save using this strategy. Again, if you felt like this video was helpful and valuable for you guys, be sure to subscribe and like this video. It does help us a lot. And be sure to go and check out some of our other videos on home equity line of credit, the accelerated banking strategy. All right, guys, I'll see you guys in the next video.